Hey, welcome back to Two Sweet Guys Try Stocks. I'm Dylan.
And I'm Vinny. And holy crap, it was a great, wild week for Alibaba shareholders like ourselves. We got some news about Alibaba themselves, and Michael Burry, the super investor, bought some more Alibaba stock. We're going to talk about this earnings report because I think it's a really pivotal one. We're seeing a dramatic shift, and it's going to really determine whether or not I want to remain an Alibaba shareholder for a long period of time or my time horizon is shortening. We're going to take a look at everything they talked about, though. All right. So, this is the 5-day chart for Alibaba shares. All right. We got a nice pop on Friday, but that's not when earnings were reported. Earnings were actually reported before the bell here on Thursday, where we got this wild speculation before market opening. Uh, you know, Initial numbers not so great. Market sold off. Earnings call had some positive things we'll talk about towards the end of the video, and then it kind of sold off the rest of the day. Then we got a Chinese macro news that was good on Friday.
I didn't
All right.
notice that. I wish I would have been day trading that. That's a beautiful double bottom. Same point.
Yeah.
See that? Look at
Yeah.
that.
I like it. I mean, the trends we can look at it if you want to bring up the chart itself. It's in an interesting place. It's in a territory it hasn't been in a little
I can
bit.
get that.
Um, but Michael Burry, we got his 13F filing this week. He's been an Alibaba shareholder for a while now, kind of trading in and out. But he increased his position. It's actually now like over 20% of his public portfolio is just in Alibaba stock alone, increasing his holdings 24% in the last 13F filing, which was for the last quarter. Now, management's highlights. All right. So this is their sales piece. This is like, why do you want to be an Alibaba shareholder? This is slide number one. All right. So as far as major metrics here, they have their Taobao Tmall, right? They're basic consumer brands, high single digit growth online GMV and double digit order growth. All right. So they were able to gain back some kind of customer loyalty and get people coming back a little bit. They talked a little bit on a conference call about stabilizing their market share. Right. So the signs are starting to kind of turn around and they look like they're stabilizing where they are. Remember at one point they had like 60% of the market. Now they're down to like 40%. Rise of TikTok really unfortunately ate into their lunch quite a bit, and as well as other Chinese competitors. But it looks like they are hoping to stabilize around this level, and they actually were finally able to see a little bit of positive momentum in some of their businesses.
Noise.
Now, another major point from the Alibaba Cloud, 6% growth, right? Now, it's anemic compared to other Western cloud providers where you're talking about 20, 30% growth. But compared to their recent quarters, they were saying 1%, 2%. It's nice to see them finally move into the mid-single digits. This is also a major talking point we're going to mention when we talk about the earnings call. And Alibaba International, very, very solid growth. They are growing significantly in other markets across the world, and I think that's going to be a future growth driver for Alibaba. But it's something to keep an eye on, but not there yet. And they did
6%
highlight,
growth is still not great
yeah, compared
comparatively
to
to other companies.
yeah, Google and Azure are talking like 20% plus.
Not great.
Yeah, it's really anemic compared to the Western companies. But like I said, it's much better than the 1-2% growth per quarter that they were demonstrating before. And they do still highlight their positive net cash position of $55.8 billion, which is a nice, sexy problem to have about how to deploy that cash. And then slide number two goes right into like the meat of what it is to be an Alibaba shareholder, with a net reduction in outstanding shares in the last quarter of 2.3%. All right. And they still have $26 billion share purchase reauthorized through 2027. Now, if you look at their current pace, they could easily chew through that in the next like 5 quarters. But who knows what their pace is going to remain into the future. I want to really highlight this. This is the amount of like cash I've been using per quarter in US dollars for share repurchases, right? So for a while, it was hovering this $2 to $3 billion per quarter range, which was good, but not fantastic when you're talking about a $200 billion company. Now, all of a sudden, look at the last 2 quarters, 4.8 billion, 5.8 billion. Big, sexy numbers in terms of share repurchases, particularly when you look at how, cheap Alibaba stock is and compared to historically. We'll get into my own kind of analysis as far as price wise a little later on as well. But they've been making some good inroads here in terms of reducing the share count. They also
Yeah.
mentioned that going forward that they're going to be prioritizing cash kind of long-term retention bonuses rather than employee stock uh, kind of payments, which is good. They're going to decrease the pace of you're going to see of dilution coming from employee share offerings.
They actually spent more in the last 2 quarters than in the previous four before that. That's a lot. I mean,
Yeah.
they could blow through that 26 billion in 5 quarters at that rate. That'd be pretty crazy.
Yeah, I mean, I would absolutely love to see that, well, especially if the share prices remain, kind of depressed like they are now. This is where like people are just like, what the hell happened to this company? Look at all these negative numbers. All right, this is just like complete and utter trash when you look on a year-over-year basis, where
Yeah.
you have so many things decreasing. The income from operations down 15%, and then other ones, net income down 27%, net income for ordinary shareholders down 29%, non-GAAP net income 9%, then ordinary shareholder down 10% here. Just a absolute like bloodbath of year-over-year comparisons in terms of decreasing profits and delivering income from their regular operations for shareholders. Just horrible. Like there's no other way of saying that. It's just not good. All right, we're going to get
Do
into a
you
little bit
know?
more about why and those sort of things here in a minute.
Oh,
Okay,
okay. I was going to ask why, because that's depressing.
so this is another one that came out and was kind of like a not a great number, was their actual free cash flow, which is the one that I like to watch the most here. So 2.4 billion in the most recent quarter. Now they don't give you their comps in US dollars, but look at it here, maybe we're talking about 39 billion to 17 billion. Right? It's a 50% drop in free cash flow.
Okay.
Yeah. But the real question is why? All right. CAPEX, look at this. So 6.9 billion, this is once again maybe to 12 billion. All right. They've almost doubled their CAPEX. All right. That's like, okay. So we're spending a lot more and we're not really growing on the top line very significantly. Why? All right. I want to save that a little bit more for the conference call stuff, because that's really where they get the meat of it. And that's why you saw that positive reaction after they finally explained what the hell they're doing. And this is the last thing I wanted to talk about on the slide, was $55 billion in net positive free cash. All right, cost controls. All right, so the actual cost of revenue, mostly flat, stable here, nothing too crazy. They did have a little increase in sales and marketing. All right, so they are trying to spend a little bit more in sales and marketing to get more consumers to come back to their platform and have more frequent purchases. That's why they saw the double-digit growth in orders, and then the GMV was like high single digits. Um, R&D, they kept keeping mostly flat. They did have an increase in general administrative. They said it was related to a class action lawsuit. So that would have been basically flat if not for this. But it's something else to keep an eye on, make sure that they're not getting their costs out of control. So all of those negative things happening about income and free cash flow, and yet when we look at like the actual EBITDA here, we're like, all right, looks like garbage for the most part. Just negative 1% for the Taobao Tmall group, which is by far and away their golden goose. Not what you want to see from a kind of shareholder perspective. So these are definitely some caution and warning flags for me. Um, but like I said, we're going to turn it around here.
Yeah,
They
this
gave
is
some
all
highlights.
very depressing.
Yeah, it is. It really is. So you see why the first reaction was very negative, right? That's why the stock was down 2%. It's the earnings call which is going to give you some positivity. This is on their presentation. You can look at it yourself if you want. There was nothing here that was like earth shattering to me, so I'm not going to really spend any significant time on it. Same thing with the cloud here. They talk about the 6% growth and nothing too crazy. They do highlight some. Carried a lot of the Olympic broadcasts, and like, yeah, okay, but I care about money, not about these little points. All right, so here's where we're going to get to the meat of this whole thing, right? Conference call notes. There's a new technology fee that they're imposing on merchants starting in September, which will be 0.6% of GMV, and it'll be refunded for small and medium merchants if they don't meet a certain threshold. All right, so they're basically increasing the tax a little bit on their kind of platform or merchants. So that right there should bring a significant amount of increased revenue for Alibaba, right?
Yeah, I wonder what it is comparative to Amazon, because Amazon takes a fairly large chunk, like a
Yeah,
surprisingly large chunk.
they did mention that in their conference call as well. They didn't say number, but they said that this is kind of the number that they settled upon, looking at the market and looking at and talking to their customers, that they thought was like a fair number. They didn't go into details about how much revenue they expected to bring on board. They didn't talk about what the threshold is going to be for GMV size before they are not collecting it from their customers. This is really going to be more on their larger customers initially, and But this is going to be that high margin kind of revenue, which we love, right? Remember they talked about how Taiwan Tmall revenue is split into two segments. There's their direct sales, which was down like 9%, but their GMV that was up like 2%. This is going to add more to that
Right.
CMV. I'm sorry, consumer management revenue. This will add to that, so it's that high margin business. So that's good. They're going to have a new fees here starting like next month. Now, cloud capex. All right, they said that the size that we saw this quarter that we could expect to see for several quarters. Right, so that was kind of doubled from last year, and that's why free cash flow was down so significantly. They're saying that it's going to be at this level of capex for several quarters. All right. But they are also saying because of that, they're going to see cloud growth in the double digits by the second
Mm,
half of this fiscal year.
I've heard that before. Not in that short of a timeline though, because second half of this fiscal year is now. So that's a bold prediction.
Well, this was their first quarter, so they have one more quarter before they get to that. Their
Oh,
calendar's off from
yeah, that's
the
true.
U.S. economic quarter. But they were asked a very good question about the ROI on capex on this cloud capex. Is it worth it? All right, it's like any new cloud capacity, any server that they put online is instantly being taken up. Yeah,
Then why aren't they
what do you think
doing
of that?
more?
Okay, that's a great question. They're working on it. They're working through a backlog of demand due to customers having significantly increased AI budgets for this year. So they're saying that every dollar of the capex they're putting on right now is instantly rewarding them. Yeah, this isn't like a 10-year plan, like building the metaverse or something like that. They're saying that they're putting these servers online and they're immediately going into use and
Then
generating revenue for Alibaba Cloud, which
turn on
is
the
good.
turn on the money fountain on that shit then. Let's
Uh-huh.
go. Let's turn it up.
Yeah, exactly. So when you first hear like, oh man, their free cash flow is down 50%, and they've doubled their capex, you're like, oh crap, like what the hell are these guys doing? But then you hear this and you're like, oh, okay, I see it. I would have done that and more, right?
Yeah.
So this is why you saw that swing after the conference call, that people were much more satisfied. Not only are we going to get this additional kind of high margin revenue coming from their old retail business, but now you're seeing that their capex going into the cloud AI sector is instantly rewarding them. So they have two very positive things that came out of this earnings call. All
I
right.
don't think the share repurchases are going to be as high next quarter.
I mean, it's a thought, right? Because like theoretically, they only had 2.3 billion in free cash flow. So if they're spending another 5 billion, that they're going to be
Yeah.
going, reducing their cash balance by like 2.7 billion, which they can do though, because they still have 55 billion dollars in positive like net cash on the balance sheet. They can continue to buy back shares and spend on capex at the same time. Now, there's some nuance to it because right, Chinese law is a little bit restrictive about how they export cash. Whether you saw that they had to do that kind of share offering and raise some cash externally in order to be able to continue to buy back shares. But that's what you're going to see them trying to, what's the word I want to say here? Feed two beasts a little bit, where they're spending increasing money on capex because they're getting good return on investment, and they're going to be buying back shares. Okay. Now, as far as this free cash flow yield calculation, I always like to use the market cap as of Friday close was 201 billion, 55.8 net positive free cash flow. The trailing 12-month free cash flow was down to 23.75 billion. It has been on a downward trend, so that's something we really need to keep an eye on. But it still gives you a 16.3% free cash flow yield. So a few thoughts here, kind of closing as far as like what my thoughts are after hearing this is I am at a kind of a pivot point where we've seen significant degradation in some of the underlying fundamentals from an earning perspective. I want to make sure that they are indeed going to manage this 10% growth in cloud over the next few quarters. I want to see that this 0.6% fee does start increasing the CMR like a revenue in Taobao Tmall, and if those things are happening, I will continue to be an Alibaba shareholder. However, if I continue to see degradation in the core business and those metrics aren't being met, then it's like I'm at a point where maybe it's time to move on.
Got to make a decision. Yeah.
Yeah,
If they're spending all that extra money, you're going to have something to show for it, essentially. Um,
absolutely.
Here's their chart. I hate these because Alibaba trades like 18 hours a day. So it's such a weird, jumpy, non flowy chart. this is the 200 and the 100 moving average, just to show you how useless the death cross is, where they say you short when it happens. This is the day it happened. You would not have done well, even though Baba's been on a massive downtrend. Wouldn't have gone that well. You can see. I mean, we are jumping up super high. Comparatively, I don't know how much that means for Baba because it's such a weird thing. They're traded, I think, only like 4 hours of rest, so it's super
Yeah.
weird. But I mean, hey, we're not in the 60s. Thank God. Might
Yeah.
go back. Not sure.
It could be. I mean, like I said, the nice thing I think is we're finally going to get some answers over the next like 2 to 3 quarters about the overall direction of Alibaba stock going into the future, and then you can make a decision about whether or not you want to continue to hold it.
All right,
That's it.
2 to 3 quarters. Oh boy. All right, guys. Let us know what you think.
Yep. Catch you next one.